Oops.
Hello, everybody. Welcome back to TRI, another edition of the morning brief with the bear in the house. Seems like Mr. B is still in the jungles of Zurich, if I'm correct. So maybe he'll join us a little later on. It's still quite hot in Europe. So for everyone who's spending their good summer days around in the good old country, so I'm hoping you're not dying of a heat stroke. Mr. Bear, how are you?
I'm good. I'm good. I'm finally awake. I got a little bit of a late start this morning. I had to shave my face because we're doing a little Napa slash Cowgirl Creamery touring today, and wanted to look a little presentable because you can't look like a woodsman when you're walking around the Napa Valley as much as you are when you're walking through the redwood forests. But yeah, I'm ready to go. How are you doing? Did you finally recover from yesterday? Sure.
Yeah, I think I'm good. So thanks for the hangover gods for sparing my life. But I guess and yeah, can't complain.
Good, good. Glad to hear. All right, so I guess we should probably jump right in. I'm trying to think if there's anything that I wanted to go over beforehand. I know the boys have got the site going on. Julian's got firing in all cylinders, getting the chat ready. I think there's a bug with Android in the chat. So if you're having issues with Android, don't be worried. I think they're going to have that fixed, and it's not just you. Other stuff, I wanted to thank everyone. I've gotten a really great outpouring of support for what I'm doing here. It's really nice to hear feedback. You know, it's really funny. You end up talking for about an hour, or if you're me and Brian, it turns out to be an hour and a half sometimes. And you just don't know if the word vomit that's escaping your mouth is helpful or useful. So it's really nice to hear all that. So thank you to everybody for the positive comments and support. Please feel free to reach out to me if there's anything that you want to hear. If you want this done slightly differently, I'm open to feedback. We're always interested to hear how we can make this show better for you and everybody else. So again, if there's anything that you'd like to see, any requests, any change in format, if you want more news, I know I've been neglecting that lately with all the price action going on. Please reach out to me and let me know that. I'm going to load the YouTube channel just so that I can follow along on any comments here, just in case people want some info or want me to take some requests. So I'm going to load that. And in the meantime, we're going to start off doing broader market. Now, yesterday I left off saying that Macro Voices was going to do a pretty interesting podcast, or I hope that they had a good guest to talk about what's going on in the broader market. And they did have a really great guest by the name of Jesse Felder. He's been on the show before, and he's been predicting, much like a lot of other people, that the stock market is in a topping pattern. He just never outright called that the crash is coming, tomorrow or the next week. But he puts together a really good case for our bearish case in the equity market. So if you haven't listened to Jesse Felder and the Macro Voices guys, I mean, it doesn't seem like the stock market's about to collapse right away, but it's probably smart at least to listen to them. Now, if you are a regular Macro Voices follower, you probably already know that this is their last podcast for the next 3 weeks. So they won't be putting on a show until the end of August. They've got kind of this meeting going on in Toronto where they're getting all their guests together. So I think while they're doing that, there will be no podcast. So this is kind of the last one that leaves us with a lot of cool information. And I learned a couple of really cool things that I want to share with everybody. So I hope you enjoyed that. I'm on the YouTube, so I don't see any comments. I'm just going to make sure this is working. Good. Looks like that's live. All right, cool. So let's jump right in. Let's start with stocks. It looks like the Dow's rebounding slightly, and that is kind of interesting because we're waiting for this market structure top, which came in yesterday, confirmed almost. I mean, it's pretty close there. It looks like to me that's confirmed. And now we're kind of bouncing a little bit higher. This is probably just kind of like a little sucker people in move. I still like that this divergence is live. I like that, really nothing has changed over the last few days that I've been talking about. So I actually last night started hunting VIX calls. And before I jump into that, and also dog, I've been looking to buy the dog as well. So I think it's probably best that I go to the dog because that's the Dow 30 ProShare short. So this is the opposite trade to the Dow because you can't outright short the Dow Jones Industrial Average unless you're going to be using puts and calls, which I don't even actually know how to do that for the Dow. So the dog is really the best way of doing this. And you can just outright buy the dog. And that's this is coming into a great area here. If you want to take some fibs, I mean, this is just such simple stuff that you learn in level 1, and it applies and is so useful across every market and always comes in handy. So if you wanted to be a buyer of this pullback after this market structure W breakout, I mean, you can see you'd be setting your bids kind of between Mountain Man and 78.6. So anywhere between $57.08 all the way up to 57.25. So I think that for my purposes, this makes sense to start nibbling on. These gaps have been filled. Doesn't look like there's any real gaps other than the one that might have been created today. So I'm going to be going in there and adding to my position while I'm listening to all the wine snobs yapping away about how their wine is fun and it tastes like rainbows and unicorns. And I'm just going to laugh at them while I'm putting on my positions. The S&P is looking interesting as well. Same interesting format. I keep saying that because, this market just never wants to give us a clear signal. And this thing is so overbought and so embedded at this point that I'm ready for this thing to roll over. And the problem is, I'm sure everybody else is. And we talked about this in gold. When everybody's on one side of the trade, it's probably not going to happen. But I'm going to get into what Jesse Felder talked about. Not going to try to spend too much time. I always say I want to get into crypto, but this bullish engulfing bar is kind of worrisome, right? So this is on the daily SPX. Let's see if we see the same thing on the EQ. Where the hell did that go? Oh man, someone's screwing around with my lists here. That sucks. Okay, so let's do ES1. I said EQ, I meant ES1. This is the S&P futures mini position. So whenever I'm taking a short or doing long, sorry, I don't take shorts on these positions. I play options via calls and puts. And it looks like the ES1 is usually my proxy for how I play puts and calls on this thing. And that's why I like using this chart as opposed to the SPX. And the SPX for me, I believe is like the European version of this, but the European style options. So let's see how this looks on the ES1. There we go, 28.31 right now. So not quite the same bullish engulfing, but we are kind of in an awkward little uptrend, right? So I hate drawing trend lines off of things like this, but maybe we could actually draw it from here to here. This could potentially be the trend line we want to work with. So let's see how this works out. Extend the right end. Yeah, I mean, it's a loose trend on that. Maybe the trend line really should be down here to here. So you can see there's a lot of downward potential just to test that downward trend line. This one's kind of being tested. It's kind of, it is losing it somewhat. But again, this 13 EMA is propping this thing up as well. So I want to see it lose that. I want to see this thing put in a nice top and then come down. So until that happens, any plays that I'm talking about are really premature. So I am technically front running this S&P market, but when it comes to the Dow, I think that one has already materialized for me. So any kind of positions I take here are confirmed. We do have our divergence confirmation. So I have my reasons for a trade. And today's increase is on lower volume, very low volume. In fact, yesterday's increase was also on lower volume than this bearish candle. So while the impetus still looks like it's, what's that? Someone chiming in there? Is my audio still good? All right, looks like someone
your audio is a little...
I'm good, Alex.
The audio is a little wonky, but
A
yeah.
little wonky. Okay. All right. Well, hopefully, all right. People are saying I'm good to them, so maybe it's just the European connection. Brian Beamish has disturbed the internet in Europe. All right. So there you go. So you've got the Dow, we've got the S&P, Nasdaq. Nasdaq's interestingly on the decline today after putting in this W. I mean, Nasdaq is certainly disconnected from most of these markets, and that makes sense after we've seen our tech names kind of get blown off here. Real quickly, want to mention the dollar before I go into any FANG stocks. Dollar index. This is our live version. So what we really want to see is a definitive close above this 95.5 handle. Otherwise, this looks like, rounded bottom potential, but could also be potential top, MACD coiling. Same thing this whole week. Just give us a damn direction on the dollar so we know what to do here. And funny enough, gold rallied off of its bottoms here, so we got to redraw these fibs. Jesse Felder was talking about gold, and he says my guest from last week, who was like, I really like, technically speaking, this level. I think gold should bounce from here. And but they did make a comment that since everyone is on that one side of the trade, they wouldn't be surprised to see it move lower. And sure enough, that's what we're doing here. So is this an FU move? Too early to tell. We are definitely oversold. We don't really have any divs that are confirmed just yet. So I think it's a little early on the gold trade, but if you are a gold bug, or you are a firm believer in gold and you believe that the dollar is going to collapse, it's probably really smart to be adding in this area. I mean, as far as I'm concerned, I'm going to be waiting, I guess, for my signals to come in here on gold, just because this market seems to like making a fool out of as many people as possible, and that it's done yesterday. So that does gold and dollar. As far as silver, I know I've mentioned before that I like playing silver instead of the GLD, or like to play SLV on the puts and calls. So this actually looks like a real decent trade to me. So oh man, so I guess I should probably do this live, because I didn't do this last night, and this is going to make our brief go way too long. What time do we have to be out of here by? 10:30. All right, so I got about until 10:15 here, so we got 45 more minutes until I got to run. So let's actually go through this. This is a really cool position that could potentially be taken here for me. So SLV, I will be playing calls on this level. So I'd be looking to buy, if they have the 15.25 calls, or sorry, the $15 calls, I'd be looking to get a target of 1532. So 1532 minus $15 is 32 cents, divided by 2 is 16 cents. So I could theoretically pay 16 cents for these calls, and I want to be buying myself 6 months of time. So I like this once this breaks out above this level. Interestingly, this didn't make new lows, right? So this is our low here on SLV, whereas gold did make new lows on yesterday's candle. So this to me shows that the underlying strength in the SLV paper market is stronger than what it is in the spot gold market. Now, could this bust below here and make new lows? Yeah, sure. 13 EMA is acting as resistance, but I still really like this play. I like how this is potentially developing. So let's take a look and see if the calls can prevent us from getting into this and keep us honest. So we're in August, so I have to buy February calls. I don't even know if these are going to be on here. All right, so our expiration, we got January. So I'll take a look at January. I'll do all view chain. There should only be one chain for, interesting. Okay, yeah, so there should only be one chain for January, and there is. The $15 calls are way too expensive. These are 60 cents a piece. So our range is probably too short, too small here on these options. So either that or I'm doing this wrong, but I don't think I am, right? So why would I? So if I buy the $15 call, oh, you know what? I should probably do this slightly differently. So if I can buy the 14, no, let's see, what does this give us here? So we've got the 14, the 14 and a half. Yeah, all these are really, even if I bought the 14 and a half dollar calls and I was risking to that 1532, so 1532 minus 1450 gives us what, 82 cents. Divide that by 2, I can only do about 41 cents here on the 14 and a half. So all these silver calls are overpriced. I can't play that. So let's see if March is any cheaper. Usually the further you go out on these things, the more expensive they get. And that is the case here. These are 67 cents. Maybe let's go to December, see if I can cheat a little bit. This is, if you've taken level 3, you know you have to buy yourself 6 months worth of time. And wow, the $15 calls are slightly cheaper, but still too expensive. So I'm going to assume that this play is going to be really, really high risk, especially if I just go to October. And that's kind of what I've been doing with the VIX. And unfortunately, it's almost like you're forcing a trade. Yeah, even the $15 calls on October are still too much money, only almost twice as expensive. So it looks like I've missed this. Maybe we need a down day on SLV for this to look better. And sure enough, we've left a gap here. So if we can go down about 10 cents or so, I'm going to reprice these again on Monday and see if these look more attractive by then. So there you have it. You just got a little window into level 3 and what we do in options land. This is a nice little glimpse here. So next we've got to take a look at some of these Netflix. I know we went over Netflix yesterday, and it's interesting that Jesse Felder talked about Netflix and said that, you know, a lot of these stocks are just so freaking overvalued, like Facebook, like Netflix, like what are the other ones? Twitter, these social media stocks that people are just kind of buying into because of, well, promises. They're really, what are you really buying as a value proposition? I mean, what's Netflix really worth? They don't really have a value here. Their subscriber base is kind of what people go on, especially for Facebook, the same thing. Like, how do you really determine what they're worth? It's only their ad revenue that Wall Street really put their belief into what this thing had value behind. And then you had that scandal, and all of a sudden the main value proposition for the stock has been cleared out. And really, I didn't actually, I mean, I kind of heard about this, but it didn't really drive home the point to me, in that the 120 or $140 billion loss that was erased on Facebook in one day is actually the #1 most, the highest loss on any one stock in history in one day. So to have that much wiped out on your market cap is historic. Before that, we had Intel. Intel was #3. I don't know what #2 is, but this is horrible, right? So if you just take this range here, I mean, sure, this looks like a reload zone, but what does this thing look like on the weekly? I mean, it seems like a lot of investors, at least from here, it's so great to hear these podcasts, right? Because you get an insider's perspective into what institutions are thinking, what hedge funds are thinking, what the real money is thinking here. And the real money is thinking is, well, these things used to be worth something, and they used to be new technologies, but now why would I buy these things? What do they do for me? Why are these things so overvalued? What's the reason for the overvalue? And people used to buy those just simply for the fact that they were going to continue making money. Well, I think that's off the table now. So if you take a weekly chart here and you take your fib retracements all the way down to 20 bucks, 38.2 is all the way down at $143. So we'd have to lose these lows here, and that kind of activates our next moves downward. And look at this volume profile. I mean, this thing's anemic all the way down to 120 bucks. I personally wouldn't mind hunting any kind of put options as we make our way back up here. And I think that's going to be a reload zone. So I'm going to be watching this for sure over the next coming weeks and months to see if I can set myself up to buy 6 months or even a year's worth of time on a Facebook put, because I think that the value behind this thing has evaporated. And unless Facebook can come up with a novel way of attracting new investors and coming up with a new value proposition, I think this stock is toast. We've seen other stocks kind of get hit like this, and I mean, I really just don't like hearing this, right? Because a lot of the money that's propping this thing up, they're not there anymore. And that's why you had this massive sell-off. Now, at this point, if you are holding this stock and you're big money, you're going to realize you want to be offloading up in here. You want to be, selling off in these gaps and reload zones. That's just how smart money works. They don't sell the bottoms of markets. We all know that here. So keep that in mind moving forward. I definitely think this is going to set us up for a monumental trade. Next on the list, I mean, Tesla, we already covered that one. That one went long. Boy, Tesla keeps pushing higher. That's really no surprise here. Tesla is a great, I mean, I just love to read about all the new technology that they have, and they're actually delivering real products, right? Whereas Facebook, what are they delivering? What's Netflix delivering? Like, everyone's watching movies. Okay, that's cool. Well, look what happened to MoviePass. I mean, I understand that they're very different businesses and very different ideas, but still, I mean, this thing's lost every single day. This thing is down almost 50%. I mean, this is incredible. This thing has just gotten absolutely wrecked. I mean, it's game over for this thing. I think they are officially bankrupt, although they're, but boy, talk about wreckage. This thing's just been destroyed. Can't buy this thing just yet. This is going to be a long sideways move. If it does eventually start making headlines again or starts putting in W's, I mean, this has become a penny stock now. So if you are, this is like an altcoin as well. So, I mean, I love the idea of this thing just making a quick punch up. I mean, to get a double off on this thing wouldn't be that hard. The question is, are they going to delist it? I think this is just the parent company for MoviePass. So it'd probably be wise if anyone's willing to do some research on this thing. I wouldn't be surprised if we see this thing bottom out between 4 cents and where we are now. And if we were buy a little lick of this thing, I mean, a double or a triple shouldn't be that hard to get on something like this. And that would just be a dead cat bounce. But hey, we're traders. We're not here to predict the next big company that's going to come out. And I'd be surprised if it was this one. So cool idea to chew on. VIX. So I like that the VIX is kind of punching lower here. In fact, we've made new lows on this tail here. And that's just so fascinating that they're trying to put this genie back in the bottle. This tail has needed to be eaten for a while now. This thing's sitting down around $10.90. My calls are, oh man, is this not the right chart? I hate when this thing doesn't load with my fibs on it. Let me see if I can get this right up here. Here's my, yeah, this is the right one. But this one is the end of day. So I see I've got two different ones. So this is where I'd want to be buying calls. So I'm going to be looking at the $18 as $18.56 as my target. And I think I'm going to be looking to buy the $14 calls. Now, yesterday they were just a smidge too expensive. I have a hunch that these might actually be buyable now. So from 1856 down to 14, do the math. So that's 456 divided by 2. That's 228 on a $14 call. And I'm going to not be buying myself 6 months of time because I really want to get in on this thing, and buying 6 months worth of time is going to be way too expensive. So the $14 calls in October, I said we're supposed to be $2.28, right? Or yeah, $2.28, $14 calls. Oh, we're so close. $2.65. $15 calls are $2.20. So 15 from 1856, we're still a little too expensive on those. Maybe if I go to, I mean, this sucks. I'd hate to only buy myself a month worth of time, but it'd be interesting to see, is this thing even in the same area? And looks like I don't want to be buying these. And it's just interesting to see the open interest. You can really tell where they're going to want to lock this thing down. So the $14 calls are $1.95. Oh, God. I really don't want to buy those. I mean, it's really not enough time. Expiration 9/19. All right, this is going to be a tough decision for me. But as far as calls are concerned, you can see where the walls are. So they really don't want this thing to go any higher than $18. They kind of want to get these to expire worthless. And same thing on the puts. You can see where our walls are. So it looks like it's between 14 and 18, which is perfectly in my range. We've got all this stuff that would expire worthless if they could keep it at 18 bucks. I mean, look at all this. All this crap would expire worthless if they could just get it pegged at that $18 area on the VIX. I mean, they would just, Wall Street would hit a home run, of course. Same thing on the puts. They really want to keep this thing below, looks like 14 or so. So anything, they can keep this, or sorry, they want to keep this above 14, and all of this expires worthless. So this is a roll the dice one. I don't know if I'm going to gamble here just yet. Maybe I'll get drunk enough at the vineyards and think about why $14 calls, Tom. I just like those. I like that the range that I have on my chart here. I'm taking a smaller range. I think it's more conservative than this up here. You know, if we are to cataclysmically crash, yeah, sure, this range is perfectly valid, but I don't really want to be paying huge premiums to buy calls up in this area. I think that this is kind of the conservative play. If you disagree with me, please, you know, feel free to let me know what you're thinking there. Happy to hear what you've got to say about those. But I like that area. I just like that, you know, this would validate our market structure bottom here, just that area there. And then, of course, you have a bigger W. There's just so many Ws that would come in here that, sure, the $18 calls would be great. And I probably have a target maybe a little bit high, or sorry, the $14 calls, but my 1856 target, I mean, yeah, sure, sometimes people use $16. It's just the way that I want to skin this cat. It might be a little different. Is trading while impaired in your trading plan? No, especially not on crypto and not on bigger names, but names where I'm chicken shit and I don't want to buy. Maybe a little glass of wine might get me into this VIX play that I've been waiting to get into for so long. And maybe it won't. We'll see. I'll let everyone know on Monday what happens. But I certainly won't be risking the farm, right? So the important thing is to make sure that, at least from my perspective, that my risk management is available. And I won't be doing anything dumb. Don't worry. Thanks for looking out for me, Shane. You always got my back. All right. I think we should probably talk about this Jesse Felder interview just quickly. He's got a slide deck here you can download. If you go to macrovoices.com and you're listening to the podcast in the car, or you're listening to it at your computer, much more so on the computer, because you can follow along with the slide deck. And I actually had to listen to this a second time over because some of the slides here are really cool and they go along with what he's saying. The problem is he doesn't explain them completely. So I had to do a bit of research just to understand what was going on here. And some of them are self-explanatory. Like now he's calling what's happening now the everything bubble. So I'm sure you can understand what that means. But we can see the last time that these kind of bubbles peaked. So the dot-com bubble, can you see the M here? This thing just boom, rolled over, crashed down here. No surprises there, market structure top. Same thing with the housing bubble. I mean, it's just fascinating. You see these market structure tops and they're just so powerful. So as far as the everything bubble, I don't see a market structure top just yet. And you can see his scale is rather large. So he jumps in 10-year increments here. So right now we're close to 2020, but we are 2 years off. So maybe this thing needs another year or two before this whole bubble melts down. I mean, that would certainly test everybody's patience and especially people who are shorting the markets. I mean, sure, they could roll over, but do they roll over 30, 40, 50%? Probably not. This bubble would need to pop. But interestingly enough, this is only a measurement of household net worth to disposable income. And that's how they were able to tell that these markets were ready to roll over. Household net worth is certainly going, housing prices are going up. Household net worth, I mean, that means that people are making more and more money to the money that they have available to spend. And as that tops out, that just shows that there isn't enough money being injected into this system here, and that thing rolls over. Now, there's something called the Warren Buffett yardstick. And people that are smarter than me probably understand this better. But essentially what he does is he used the 10-year note to kind of guess where the market was going to go. And what I didn't really understand during the podcast was that the blue is the actual 10-year note and the red is the forecasted. And they were talking about how Warren Buffett accurately predicted that this market was going to roll over on the 10-year. And I didn't really understand this chart. So if anyone wants to come on next week and talk about that, that would be great, because I want to understand Warren Buffett's yardstick. And frankly, I didn't have enough time to go through it and had to get a decent night's sleep. Next slide that was really interesting is the leveraged positions. So you can actually tell leverage positions in the market and how they've been kind of adding to it or taking away from their positions. And what Jesse highlighted is that a lot of smart money has been taking their money off the table, and leveraged positions, while at all-time highs, is what I'm trying to say, is leveraged positions in this market are incredibly high. And whenever you see leveraged positions making all-time highs and people taking huge bets, that's generally a recipe for disaster. You've seen the movies like The Big Short or other instances when individuals or institutions rather will take these big positions. That adds a lot of risk into the system. And in this case, this is going to be the eventual unwinding, is when you see these leveraged positions getting to all-time highs and you actually compare back in time. That's when the market, as this leverage is built up, it causes the stress and it causes this built up energy. And generally, most people don't like to see that happen. And it seems like this is what is winding up to cause the next crash. So this is what you can see here is US stock market leverage, which is net margin debt plus excuse me, got a tongue twister. I haven't eaten breakfast to keep the tongue going. Got to stretch it. US stock market leverage is net margin debt plus net leveraged ETFs plus net speculative futures positioning. So all of this data is aggregated through FINRA, CFTC, and also top-down charts. And he puts this together. I think this chart is from top-down charts, actually. But essentially what's happening here is we have record numbers of stock market leverage. You can see even back to 97, we haven't been this high in a long time. The last time leveraged positions made their highs was into 2008, and look what happened. We crashed. Same thing, 2011, crashed. That quick 2015 pullback during Brexit, same thing, decline. If this doesn't scream, get the hell out of the way, I don't know what does. I mean, this is like, holy shit, nosebleed levels. I mean, the problem is there's still no market structure top here. I mean, this put in a false top. Maybe that's the same thing we're looking at here, but good Lord. I mean, if that doesn't scare you, nothing will. You can survive any horror movie or any kind of, I don't know why I said that. All right, S&P 500. There's something interesting that I learned, and this is called the Hindenburg omen. And many of you may be familiar with it, or you may not be. But just to give a quick overview, what is the Hindenburg omen? There are two criteria for what you want to be looking for. And everyone's familiar with the 1930s disaster of Germany's airship. It's kind of the same thing here that's been named after that by a guy by the name of James Mickia. Essentially what you need are these two criteria. So you need both new highs and new lows over a 52-week period. So over 52 weeks, if you see highs and lows in a stock market index that are greater than what they call threshold amount, which is what they call 2.8%. Now, really, what you need to look for is just a given name or a bunch of names that have made highs and lows in that 52-week period, in addition to a positive recent trend. Does this sound at all familiar to anyone? The stock market index has to be greater in value than it was 50 days ago. Sounds really familiar. Here's an example that they gave, which I thought illustrated this point really well. You can see that this made new highs and also new lows, and that triggers a Hindenburg omen. This is the scale is a little bit different here. It's not taking into account the full 52 weeks, but we can just assume that to the left of this, that we were experiencing that 52-week high and low period. And sure enough, this thing dumped and collapsed. So, I mean, this sounds incredibly familiar to what we're seeing right now in the stock market. Now, let's take a look at Jesse's slide. This is really fascinating because This is the SPX in blue. You can see how it's making new highs. Now, all these colors down here, these are Hindenburg omens that have been triggered. Now, the yellow ones are the 10-day total, orange ones are 30-day, and the red is the 6-month total. Look at all of this stuff in here. He said that in the last year, the amount of Hindenburg omens is over 20. And that's a lot that have come up. That number may actually be higher. I may be misremembering that. But essentially the point is that the number of these Hindenburg omens is at all-time historic highs. The last time there were highs in the with these Hindenburg omens, you can see they predicted market crashes here. Look at this, 2000 crash. Same thing, 2008 crash. And then same thing here, 2015, not quite a crash, but a pullback. Are we going to get a crash or a pullback? Don't know. But look, this is the last area where we probably need to come down to, that 2000 area. That would probably make sense before this everything bubble pops. So this is really cool data. I really love seeing this. Jesse actually uses TradingView himself. So if you want to follow this guy on TradingView, this is his name, Jesse Felder. I don't know if he's publishing anything, but he does use Fibonacci extensions in addition to the Tom DeMark indicators. So it looks like he's counting 9s and 13s. I don't know how the TD indicator works other than like the 1 through 9 count, and then you expect a pullback, and then something on a 13, same thing. So that's what we're seeing here. He's seeing topping out patterns in the Tom DeMark indicator. We're also reaching key fib extension levels between the 2832 and 2800, yada, yada, yada. No surprise to us. We know all this already. Now, there's something else called the Smart Money Index. This is also fascinating. You can look up what the Smart Money Index is. It's just a simple calculation of positions taken at the open with positions taken at the close, and the Smart Money Index is tanking. So smart money is not able to buy back their stock. So what happens is when people sell off at open, what happens is within 30 minutes of close, big institutions are not allowed to buy back their sells, and that causes a decline in the Smart Money Index because, and I may have this slightly wrong, so feel free, please research this yourself. But the point to take from this graph is that the Smart Money Index is declining in relationship to the SPX. You know what, let me just look this up real quick, and I promise we'll move to crypto after I get to these last slides. So Smart Money Index is, it's actually a simple calculation. Let's see if I can get this thing up on Wikipedia. My med school professors would tell me I'm not using a good primary source, but they can shove it because everyone uses it anyway. If you ever go see the doctor, they're pulling up Wikipedia too. All right, so for instance, the Smart Money Index closed yesterday at 10,000 during the first 30 days of trade, blah, 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 blah. All right, so today's Smart Money Index reading equals yesterday's Smart Money Index minus the opening gain or loss plus the last hour of in the change of a given price. So I think the reason why they call it the Smart Money Index is really just because it measures overreaction from the open to the close. And smart money isn't supposed to overreact, right? So I guess I was kind of on the right track here. And that's what we're seeing here is on open, people panic to the day's, the overnight news, the overnight events, dumping. And then by the end of the day, they're like, oh, well, that wasn't so bad. Maybe I should buy this sucker back. That's not smart money. You don't do that shit if you're an institution. That just goes to show there's a lot of indecisiveness and a lot of indecision in the market. Now, here's the most fascinating part of this whole thing to me. Jesse takes an S&P 500 chart and he overlays it with a 1937 chart. So he takes what happened in 1937, this is the blue, and he puts it over the current action. And I'd be damned if this thing doesn't look almost exactly the same. Slight differences here, but as the 1937 economy expanded, the same thing happened. And look what happened in 1937. Now, I personally hate comparing markets to past events. I think it's dangerous and I think it's stupid. But that's just me. There are lots of people in the space that are like, well, this reminds me of 2001. No. This one reminds me of 1997. Oh, no, I remember in 1981. This is the same thing. Like, everyone's going to have their own experience with what the market reminds them of. But the point of the matter is that markets are never, ever going to behave exactly the same as prior ones. So just remember that while this chart is cool and it looks like it matches up really well, we could just be proved wrong and this thing could just make new highs and screw us all over. And that's what markets like to do, make fools out of all of us. And I promise I'll stop saying that so much. But just remember that. But a cool chart nonetheless to bring to everyone's attention. All right, next, let's move into crypto. And I want to cover this OK Exchange debauchery. And it looks like OK Exchange was not able to bring us to new highs, to get us to cover that $416 million long position. Zero Hedge ran a pizza. I mean, an article ran an article about this Bitcoin whale blowing up. And essentially what's happened here is OK Exchange decided to inject 2,500 BTC into their insurance fund to help cover a lot of these losses. Now, I was under the impression that there were 950 Bitcoin that had to be liquidated, but it seems like that probably doesn't make sense. So let's do the math. 950 Bitcoin times, what are we at? 7,600. That's 7,220,000. So that wasn't enough. So I don't know, $116 million hasn't really been covered here. They only injected 18 million. Thanks a lot, OK Exchange. You really made a big difference here, you schmucks. But everyone, including myself, we've all been assessed socialized losses here. And from what I could see, I mean, Zero Hedge is saying it's 18%. I didn't do the math, but I think mine was a little higher than that. So essentially what this article continues to talk about is that the entire market was waiting for this to resolve itself, that all this price action to the downside was predicated on Mr. Irresponsible Schmuck himself here. And it's funny because OK Exchange had a press release here, and I want to thank, I don't know who this is on Twitter, but we've been talking a lot, AB0X, I think. He showed me, he posted this article for OK Exchange so I could show it to everyone. It's at AB_0. So feel free to PM me. I'd love to know who you are on the site. But essentially, this is what they've released here. Is that, and this is actually my favorite quote. So let me make sure I have it before I start reading it. Yeah, here it is. This is hilarious to me. This is like, you know, the little kid complaining to his parents that he didn't get what he wanted. So OK Exchange is saying the client with user ID, yada, 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 won't even mention anything about him. So anonymous user initiated an unusually long position order, 4,168,515 contracts at 2 a.m., or I guess that's 2 p.m. August 1st, Eastern time. And is that right? 2 p.m.? Yeah, so it's backwards. So it's 2 p.m. on July 31st. So it triggered our risk management and alert system. What that really means, it's probably some dude in a cave was just like, oh no, this guy took a really big position. What do we do? So it says our risk management team immediately contacted the client, requesting the client several times to partially close the positions to reduce the overall market risk. I can imagine this happening right now. I've cashed out before on OK Exchange, and what happens is you get this crazy phone call from a Chinese number, and they must be using a voice over IP system because the quality of the call is so bad. They sound like robots. And then every second or so, you get a quick increase in quality and you can hear what they're saying. They sound like a person. But I can just imagine how this goes. Sir, we really need you to close your position. Please, please, you will bankrupt us. Please close your position. And they continue and say that, however, the client refused to cooperate, which led to our decision of freezing the client's account. So that means the guy had way more than $416 million in there. And this idiot is trying to go even higher. He's trying to put more leverage to go long on a position where the position's already gone against him. I mean, if this guy isn't a degenerate gambler, I don't know what that makes him. I mean, that's just incredible. That's the most amount of money ever put onto this exchange. And I mean, the guy obviously refuses to cooperate. And shortly after this, the preemptive action, they tried to prevent you. I mean, this could have just been made worse. Could you imagine if they lost $1 billion? This whole thing would just collapse. Anyway, the price continued to tumble, as they say, unfortunately, causing liquidation of the account. So here's what they decided to do. They injected 2,500 BTC into the insurance fund. And during settlement, what they did was they tried to prevent this guy from manipulating the price or anyone else from dumping it lower. So they gave a settlement delay of 10 minutes so that the delivery and settlement of this weekly contract or weekly delivery, this guy, on OK Exchange every week, they deliver whatever profit you've made so you could cash it out, but they don't necessarily close out your position. And those of you that trade on OK Exchange know what I mean. So after this, they talk about what they're going to do going forward. And they have a very robust document, very long, detailing what they plan on doing to prevent this from happening again. And really, they should have had this in place in the first place because you didn't need any maintenance margin. If any of you have ever shorted or longed through your traditional brokerage, you need what's called a maintenance margin account. So you need money in your account to cover if your position goes against you. And you have to have a certain percentage backed up in your maintenance margin account, to cover your margin short. Because if you lose too much, guess what? They have to pay for that, or they call you up and they're like, you need to add more money into your account. There have been stories in the past on Reddit of people blowing up their accounts going short, where their $50,000 short ended up costing them almost $500,000, and they didn't have the money to cover that because they didn't understand what naked shorting was. Well, if they took TRI's class, they probably wouldn't have had that issue. But essentially what OK Exchange is doing now is they're limiting the amount of contracts that you can put on at 10x and 20x leverage. And here you can see on Bitcoin at 10x leverage, you can only put 200,000 contracts on. Same thing with Ethereum, and then 50,000 contracts with Litecoin. So this is going to bump up into a lot of people's maximum amounts that they're going to want to put on. And I don't know if this is what they're going to leave it as, but essentially there's two different modes on the account, which is cross and fixed. And I mean, I don't know how this is going to change. They have all these great plans in place and how they're going to prevent this manipulation and prevent this kind of loss from happening again. Whether or not these are the final numbers, I don't know. But if I can only put 200,000 contracts on a position, that's going to be kind of a limiting factor for a few people who are trading on that site. I know BitMEX is just like, well, we have 100x leverage, and if you want to trade Ethereum, we can give you 50x leverage. And by the way, you don't even need to hold Ethereum. Like, what are these people doing? It's incredible. All these people are giving so much potential leverage, and yet Tom says there's no socialized losses on MEX. So I don't really know, who's trading on there, and if they do lose money, I don't know how it works. How do they cover that? Maybe they have a more robust insurance fund. I'm not really sure, but OK Exchange is certainly trying their best to act like a real exchange because they've gotten stung hard here. To lose $18 million isn't fun, but it may end up being peanuts for them. Who knows? All right, I'm not going to spend too much more time on here because I know the majority of people listening don't really trade here on OK Exchange. So if you want this article, you can go ahead and find it on their website. I'm going to post this in the lounge for everyone. So this is going to be an @all. So you'll be notified of this. And there you go. Notify all in this room is not allowed. All right, sorry, can't notify all. So you can just scroll up. This is posted here. All right, so let's get into some technicals. And you know what, maybe, I don't know if there was any news here today that's causing the market to bounce slightly, but oh, this is interesting. So there's a Tether update investigation with the former FBI director, Louis Freeh. Let's see what this article says before we go into these technicals, and then I'll quickly run down because I don't think much has changed. We've kind of got the same message going across those three names. So that's what Tether looks like. If you've ever wondered what it's like to work at Tether's offices, you get put behind a glass wall and you just try to escape because you're stuck in shitcoin land. So during an interview with Dan Roberts, revealed facts about Tether, Dan Roberts said this was the first time that Free has ever investigated anything cryptocurrency, but we talked about Tether, their hearing. He further added they might be staffing up their firm. Investigation revealed that the company had 2.5 billion worth, out of which 2.53 circulate. So according to this, they have more than that, and that's what the report said that I remember reading. Scrutiny. I don't know. What is this? This article just seems like fluff. I must be missing something here. So as far as I can tell, I see Louis Freeh going crypto. We talk about going crypto. All right, this is just bullshit, unless I missed something here. All right, so we'll jump into technicals. I really wanted to see something like Tether shits the bed or something, and new proxy has been launched by whoever it is. Anyway, here we are, 4-hour chart. I keep talking about how this trade needs to materialize to the long side on the 4-hour. Yesterday, we were, I guess, in this area here, right? So August 2nd, here's our daily brief candle. This area here, I said I really want to see this MACD divergence come in. I said that if this 4-hour candle closes above here, then that would maintain our market structure, but it closed below here. Oh, even the prior one. So I would have said that this candle invalidates essentially one of our leading indicator or downside to go. Now this divergence is, it's just so funny how all of this stuff builds up to these fundamental news events, right? So this guy's position is no longer weighing down on this market. So in my opinion, the market now has the green light to go up. It's got this divergence that is confirmed on the neckline, and we're just waiting for a market structure signal. So can we front run this market? Let's check the lower time frames. We are in a reload zone on the 4-hour. Nothing quite here yet for me on the hourly. This still looks wishy-washy. I think they still need to clean up the mess. 30-minute chart, same deal. I mean, you got like a rounded bottom. This is a shitty cup and handle. It's like your kid maybe made this at pottery class. It doesn't look so good to me. All right, so Bitcoin, I mean, it's pretty clear here that if this divergence does come in and we do get this market structure reversal going into the weekend, wouldn't surprise me to see at least a 38.2 test, but realistically, probably into this neckline again. And then we can see what will happen going forward. Now, if we do dump through these levels and we invalidate this MACD divergence, and Willie is oversold here, I mean, you really have to look at your higher time frame fibs and see where this could potentially go. Because, I mean, for me, the 4-hour looks like it's going to bounce, but I'd be really surprised to see a huge dump at that point. Obviously, we're just way too late to short at that stage of the game. The daily is just coming out of overbought. I'd love to see, kind of 3 short dips down here on MACD. Maybe tomorrow's candle just kind of like a higher low on MACD, and even kind of like some early indications of an inside bar firing or a fractal through the weekend. That to me would be nice. I mean, maybe we probably don't jump all the way up. It looks like this market's just kind of been punched in the face and it's a little dazed by what's happened here. But make no mistake, this market structure top is still in play. And until we get indication that the bear market is turning and we've got a short-term bounce, it's really too early to get on the long side until you get those signals. So keep that in mind on Bitcoin. And this volume here was ramping up. I don't like the way that looks. I don't know why that was in there. That's not a good sign. Maybe is the same thing here on Finex? Oh, Finex, where are you? All right, well, these two, all right, good. I actually got this to load in half decent time, maybe. Yes, I think this is my Finex chart. Let's launch this and let's get this up and going. This is our spreads. I think spreads should have broken down by now. Yep, there they are. Spreads are at $17. So they've taken the fluff out of the market. And what's funny is that once they do that, then it just means that it's probably time for it to go back up. And that's just so funny. But I mean, there's a lot of damage done here yet, and it's early to make that assumption. You really want to see some more structure come here on these spreads. But you can see as spreads were making these tops and as they were rolling over, I said we needed to lose this level for things to get really bearish. And now here we are. So the question is, how bearish are we going to get in the face of a 4-hour oversold? And to me, these spreads are not being so useful. I don't like using these as in this market state right now. In some market states, they're great to use. But if this is any indication, I mean, this thing's got way more downside to go. So if you are a believer in these spreads, then you have to take them seriously that there is more carnage to the downside left. As far as Finex is concerned, interesting action. This is the 4-hour. Yeah, this divergence is coming in. Interestingly, it's not confirmed just yet on Finex, I don't think. Or this candle is confirming it. So we got to wait for this to confirm. This will be a confirmed divergence on Finex. Willie's coming out of oversold. I want to check that daily candle to see if that was just an OK exchange manipulation candle. And yeah, so that's, I really don't like taking much the volume, like individual volume bars too seriously, because things like the end of the week on OK Exchange are really screwy. And that's what happened here. Maybe someone was trying to push the price up, like, oh no, I don't want to lose my 20%. I got to push the price higher. Well, that's stupid. Do you know how many millions of dollars you'd need to do that? And especially after this guy already wrecked himself. There's no way they're going to let anyone build a position up to that strength. Anyway, Finex is sitting at 38.2. We got some tails busting down into this area here. I'd assume this is going to cause some traffic, but I mean, look at that big gap in volume profile. That thing's just calling. But do we get like a one-way downward? Yeah, who knows? Tests of necklines, I really like those. Maybe we do need to come back up into that area. And for Finex, those numbers are as follows. 50%, 78, almost 7,900 would be a neckline test. Mountain Man wouldn't surprise me there at 8,000. I may be sprinkling bids in this area to the short side when this comes in. What do those levels look like here? Seem a little different, right? So 50% isn't quite, oh, that's why, because my fibs are not up here. That was my 4-hour. So I should be doing this on the daily as well, just to get confluence. So yeah, so 50% is at 8,000, 61.8 is 81.82. Wouldn't surprise me if we up there. That would correspond well with what a 4-hour time frame reversal would look like to me. If this is really weak, you'll see this hit 38.2. Excuse me. You'll see this hit 38.2 and then bounce back to the downside. And then you got to get really worried that this thing is going to lose these levels here and test the original breakout of this inverse head and shoulders. So that's Bitcoin. Litecoin, let's take a look at quickly. Litecoin's got kind of a messy looking divergence on the 4-hour. It's not too sexy. I don't like using this just yet, but we are massively oversold, but not almost embedded. So we are bouncing off of the 78.6 area, which is our line in the sand. I like using 78.6s, but it's still too early, right? This market just needs more room to breathe. It needs to expand itself and put in a nice bottom and then move higher. So any kind of longs that you're eyeing, really be careful, wait for that shit to come in. So same targets, obviously, on Litecoin, 38.2 neckline, same thing. I think that as a range trader myself, I can't hold a long position through this, especially in the face of that daily. I would be happy taking profits in this area, same as with Bitcoin, and then reassessing the market state, because I mean, I like taking profits, but those of you that are longer term traders, I think you have to wait a lot longer for this thing to clean itself up before you decide to make, before you take a longer term trade decision. And that's what I'd be waiting for. So those are my thoughts there. Ethereum Bitcoin proxy. This is not making new lows today. In fact, this is a green candle for today, but nothing too groundbreaking. Really nothing here other than just like railroad tracks, but that's not a reason for a trade. Same thing on the 4-hour. Looks super messy. We're probably going to need to come back down again and then put in a market structure bottom if that is in the cards. Interestingly, this is a divergence. So you have one part of the puzzle working. You just need to have all the other parts of the puzzle to make sure that you solved it correctly. And if you do jump this thing ahead, you could get wrecked to the downside. So be careful on that. Ethereum Bitcoin or Ethereum US dollar is the next thing I'm going to look at, and I got 2 minutes here. So Ethereum is at 414 on Finex, which is interesting. 13 EMA, potential, no, this is confirmed bullish divergence. Willie is overbought. It looks like shorts are coming off slightly. Longs are confused as hell. So what are we seeing on the lower time frames? None other than a messy market structure bottom here, which is not even, I don't like that shit. But this is like a W here, but I don't know if this action in here overnight is enough to hold this market up. It might be, but as far as where I would want to come into this, let's see what the futures look like. I mean, Finex is wonky for me. I guess, wow, did I just load the same chart again? And on a different, why does this look different all of a sudden? That was weird. Ethereum, Bitcoin. Oh, that's why. All right, so let's look at our Ethereum US dollar on the hourly chart. You can see yesterday I drew our squiggly line theory, and obviously I am no professional at squiggly line. It's certified by 4 different people, as Brian has been. Sideways W here on the hourly. You can see doink, doink, and then a break above that area. We're pretty close. We're toying very much so with that area. So if you are a believer in the 4-hour MACD divergence and you want to be hunting your market structure, you kind of have your reasons across there, but it's messy. This is a railroad track reversal. That in itself is also, could be a signal for a long. Potential reversal areas on Ethereum. And it seems like Ethereum kind of turned the corner before Bitcoin did. Like Bitcoin was making new lows while Ethereum was like, nah, bro, we're done. Nah, we don't want that. And that's kind of what we're seeing here is this thing wants to rally back up just on preliminary data here. We don't have the real clear signals just yet. I mean, is this a Davo on the OBV? Yeah, so we got a W here. Do we have a W in the Willie? Oh, here, Willie, show me what you got. No, nope. I mean, kind of. I don't think Dav would consider this a real Davo here. And of course, you don't have a nice W on the 4-hour. Daily chart's probably not going to show us too much because today's our first up day, other than Brian's tail wants eat, and Brian's tail has gotten eat. So maybe that's what we needed to see before moving higher. And MACD is still making lower lows. Volume did finally come in today. Just, if you want to be playing this short term, you can draw your levels and make your decisions accordingly. So that's pretty much all for me. Maybe I should look at the longs versus shorts on Bitcoin real quickly. Shorts have come off precipitously on this 4-hour. That's actually pretty amazing. Wow. So where did this happen at? What? So this happened down here. So that was the other day. I don't know why I didn't comment on that. That doesn't look familiar to me. Longs made new highs and then came off again. So this market's confused as hell. No one knows what the hell's going on here. Wait for your signals. Be smart about this. Follow your plan and just be around another day to trade this market. I wish I could answer some questions here. I think I'm going to be late to eating my cheese and my wine, so I got to run. Everyone, have a great weekend. Enjoy this. Try to be objective about the positions you take. This market is very difficult to trade now. Be smart and always remember, be around another day to trade, and don't risk all of your position on one. All right, I'm going to sign off. Enjoy, everyone. It was a pleasure, and I'll be talking to you next week. Thanks a lot. All the best. Bye from the bear.